Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com. You know the drill. We've been doing this since 2003 for individual traders and professional institutions, bringing trade ideas, market analysis, advanced mechanical systems like you see here, and of course, more recently, our KISS trend following systems. There's nothing out there like it. Even if you're not a subscriber, you should check it out. Go to Systems tab here. You'll look down, look at KISS STS tables. And here with our custom KISS system, which is a universal system that works across pretty much any instrument, we run it on over 630 instruments. We have a basket of ETFs and stocks we follow. You can see today, for example, a new smart trailing stop was generated on the Dow ETF and TLT. STS means smart trailing stop, and you can see the date of those entries. You can see what those two trades are up currently. You have all these various tabs from all the Nasdaq 100 stocks, the S&P 500 stocks, ETFs, and you can set up favorites. And this section will automatically send you an email notification and soon SMS as well whenever one of your favorites enters a new position, a new stop is generated, or it exits. We take a look at some of these. Look at some of these gains on here. Again, some of these are, some of these leveraged ETFs are crazy, obviously, but BULZ, system's up 48.5%. SOXL, it's up 37%. You can see some of these nice gains. If we go to My Favorites section, you can see here, my favorites are up all nicely. Again, this is all automated. The nice thing about the KISS systems is they can follow the trend with a fairly tight stop, a trailing stop, keep you in the position, but keep you protected and still gain more, quite a bit more than just typical buy and hold. Again, now, in order to receive notifications, you need to subscribe, okay? But again, it's in the favorites section. An amazing thing, I'm going to be going over this in more details, but let's go ahead and get back to this newsletter. So the last newsletter I did was on Monday. It is now Wednesday, November 29th, 2023. So, only got one more day in November. This is our back-end recorder for our website newsletter, which I'm going to get started now. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Monday, November 29th newsletter. November 30th, last day of the month, is tomorrow. Then we enter December. Anyway, you can see via the newsletter divided into 6 major sections. Briefly, I'm going to discuss the KISS systems once again. Hopefully, make sure you guys are utilizing that section, set up your favorites, etc. Sometime before the end of the year, I'm hoping to launch the high performance versions of the KISS systems, which I'm very excited about. And as far as the general format for the rest of the market analysis, pretty much the same. We'll then cover the general indexes, look at some custom indicators and bonds, a few sectors, US dollar, commodities, precious metals, GDX, which, by the way, that area has done phenomenally. As far as trade ideas, I didn't add any new ideas. We've had a lot of ideas over the last couple of weeks, so I'm just going to go over the ideas that we've had over the last couple of weeks. And as far as the market, again, really no changes, guys. As you know, the Bulls clearly have the football. They captured the football in late October and have scored quite a few touchdowns with one hell of a rally over the last month. Seasonality's played out with that weakness into August and September and early October. And we also think seasonality will kick into gear and likely see a pullback into early December per seasonality. Usually the first 1 or 2 weeks of December tends to be weak. So we're favoring some sort of pullback there, 3-4% pullback maybe. Again, if you're a bull, you should want a pullback because that'll help reset the energy for a better Santa Claus rally. Again, the precious metals and the stocks have been pretty phenomenal, and I'll be discussing that. So let's go ahead and get started. So first image below, item number 2. Again, I showed this on Monday, but this is taken directly from the website. Again, you go to the systems section, go to KISS STS tables. And if you haven't set up favorites, you need to do that, okay? When you're on the favorites tab, you got to click this box, the receive automatic alerts from your favorite instruments. You have to select it yourself because of spam laws. We can't just select it for you. Remember to select your favorites. You go to the various list and hit the star. To unselect a favorite, you just hit the star again and it unhighlights. But you can see some of my favorites, how nicely they're up. The nice thing about these KISS systems, they're completely automated. This website will send you an automatic email notification whenever one of your favorites enters a new long and whenever there's a new smart trailing stop STS is generated and whenever it closes out. So you can see, for example, Microsoft, a lot of these have had 6, 7, 8 trailing stops generated. BULZ, there's been 9 smart trailing stops since that system triggered long on October 31st. Pretty cool. But again, very valuable resource. If you haven't been utilizing this, if you're a subscriber to Breakpoint Trades, you're really missing out. You should go here, set up some favorites, set up your automatic email alerts, and start receiving these signals. And again, I will be launching high performance versions of these, which even blow the gains of these away. So let's go ahead and move on. So item number 3, that just shows you an example of some of the emails that have been going out to people. These are different subscribers, and this is so. Again, that's kind of how you'll see on the emails. You'll get these tables sent to you once a day or whenever there's new changes to your favorites. And you can simply just act upon those signals. You could take the trades, set your stops, stuff like that. Completely automated. Just showing some examples again. So here's a couple of those high performance KISS systems. Here's UPRO. You can see the entry there, and basically November 2nd, you can see how it's been raising the smart trailing stops up the whole time. Here's QLD. So, I mean, these cannot become losing. These are going to be winning trades with that raised smart trailing stop along the way. All right, back to the general market newsletter. So item number 5 shows the index sector table, what transpired today and this week. So today, again, bifurcation today. The Russell was the strongest, up 0.5%. The Dow was up just slightly, slight pullback on the Nasdaq and S&P. And you can see for the week, again, small movements for this week. Market, again, is just trying to digest and consolidate some of those recent big moves. As far as the 21 market sectors we follow, most were up today a bit, but again, small moves, except for the banks. Banks stood out. They were the strongest, up 2%. And you can see for the week, it's about 50-50 up and down. And as far as currencies, US dollar up a tad today, but still down about 0.5% for the week. Cryptocurrencies still remains weak. And commodities finally to the upside today. Natural gas, though, has been really taking it on the chin today, but nice bounce back in crude oil today, up 2%. The ags bounce back. And as far as precious metals, they've had a good run here. The stocks closed slightly in the negative, as did silver, but they're having a good week. And what continues to happen is the 10-year treasury yield continues to fall. Remember, I thought that this area had put in a pretty decent top several weeks ago, and that appears to be the case. Item number 6 shows the economic news calendar. And tomorrow, Thursday, we have initial jobless claims. Chicago PMI, that's obviously going to be looked at heavily. And then on Friday, we have ISM as the big one, and PMI. All right, let's go and jump to the index charts. So first chart below, item number 7 is the monthly snapshot of the major indexes. Again, hella gains in November, as you can see. Big solid up candles. Chart number 8, here's the daily view of the major indexes. Again, we were extremely oversold into the late October lows below the lower Bollinger Bands. And just look at this massive move up over the last month. Again, we're a bit stretched here, guys. Obviously, the Bulls are in control. They have the football. The charts look great, but we are a little stretched here. You know, I would welcome a little pullback weakness into early December per seasonality. Currently, you could see the 9 EMA is your current support on these indexes. Moving on to the S&P 500, which is our proxy. Here's the daily view of the S&P. Again, we had that 5-wave completed move, ABC, WXYZ pattern. That played out beautifully. And we filled that open gap, and we're pretty close to the July highs. So the question is, do we tag and slightly overshoot the highs and then pull back, or do we pull back first? That's the big question. Again, I think it's going to be in early December. And otherwise, you can see here on a nice pull, if we do get a nice pullback in December, we have a nice open gap down here that could be a target. Jabber 10, here's the equal weighted S&P. Again, as you know, this year has been fraught with negative breath, with just a few handful of stocks leading the market. We have seen some more participation, broader participation lately, which is good. But you can see otherwise how much this is lagged. This is the equal weighted S&P, where every component is weighted equally instead of giving things like Apple 10% weighting. Everything's the same. And you can see how much weaker it is than the S&P. Clearly the inverse head and shoulder played out, and we've now into this supply zone. Moving on to the KISS systems. Jabber 11, here's the daily KISS system for the S&P. Again, this went long, a couple days off the bottom in late October. And that's the thing, guys. If you are subscribed, if you have your alerts set up on the KISS STS tables, you would get alerts for these. Okay, whenever there's a new entry, whenever there's a new STS. But this is systems up nicely from that long entry. Current stop is still 43.68. It's given it quite a bit of room, but even on a pullback weakness in early December, I still think it won't hit that smart trailing stop. Jabber 12, here's the 4 time frames with some of these custom indicators we like to follow. Again, look at how stretched the moving average ribbon was in late October when we were very oversold. We had a DeMark 9, we had a support cycle. Everything was set up, and it really played out. So ATR is supporting all the time frames. You can see momentum is definitely waning. We've been going sideways, and we thought the other day we might get another pop, and we did into the day, weakening again. Now we'll see if we could still get another pop, or if we start breaking some of these support levels. Jabber 13, here's the half-day chart of the S&P. Again, similar look to the daily. We filled that gap, got a little through it. Moving average ribbon is getting a bit wide here. Remember, just like it's wide back here, whenever the ribbons get too wide, you start looking for some mean reversion action. And you can see you have some MACD divergence here with that last high. Momentum is waiting. Jabber 14, here's a 60-minute view. We're in this kind of channel, and still holding that for now. A break of this channel could start that pullback we're looking for. Remember, we have that open gap below. Jabber 15, here's a 60-minute view. And again, you can see all those freaking gaps that formed since the October 28th low. 5 gaps, essentially, which is just insane. I mean, in fact, there's another little gap up here, which I'm not showing. So really 6 gaps. That's unbelievable strength. But you can see this clean channel. We're right resting on the channel line. Do we bounce off of it or finally break this? You can see the MACD. We had a divergence up here. MACD is back to 0. It's either going to bounce off here or cross below 0, and we get our, pullback that we're looking for. Moving on to the triple Qs. Jabber 16, daily Qs. Again, they've led, and they also look a bit toppy. They're at new all-time highs, of course. Current supports are the 9 EMA. Jabber 17, triple Qs weekly chart, just showing you this potential wave count that I've had in place for a few months, which has been playing out, that wave 4 into this supply zone. Jabber 18, here's the half-day chart. Again, similar look to the daily I showed above. Jabber 19, here's the 60-minute view. Again, you can see we're kind of going sideways at the moment. So it remains to be seen. We could easily get another pop here, or we could drop. I don't think we're likely to pull back much Thursday or Friday, into the end of November. But coming into December, we'll see. Moving on to the KISS systems. Here's the KISS trend system for the triple Qs. Again, went long very nicely back there on November 1st. And you can see this one has a pretty tight trailing stop at 371.70. Still plenty of room to possibly not get hit on noise on a pullback, but definitely profitable if you entered on that signal, as that stop is well above that entry. Driver 21, here's the 4 time frames. Again, just pretty much looks like identical to the S&P. Watch these ATR supports now. Driver 22, here's the Russell 2000. It's had a great month, up 8.8%. Again, beautiful rally off that big major support zone. Driver 23, here's the Russell on the daily. Initially, it did tag. It was above its 200-day moving average intraday, pulled back. You can see a little double top there. And the Russell is definitely one I'd be looking to buy on a pullback for sure. This inverse head and shoulder pattern played out nicely. All right, guys, that does it for the major indexes. Now let's go ahead and move on to the sectors. So, chart 24, the indicators. This is the VIX. So as you know, the VIX has pulled back all the way to this big support zone. You can see it's been support since June, July, September, August. We're right back at it now. Chart 25, here's a chart of the VIX and the VVIX. The VVIX is the volatility of the VIX, okay? And quite interestingly, the VVIX, and we talked about this yesterday on our newsletter, the Bollinger Bands were pinching on the VVIX, not as much on the VIX. And so that was noteworthy, that definitely some hedging is coming into place. And sometimes the VVIX can give you kind of an earlier signal than the VIX. Chart 26, here's a chart of the S&P versus the inverse VIX. And obviously you can see how well they are correlated to each other. So you definitely want to watch this. Chart 27, here's the SVXY. That's the inverse VIX ETF versus the S&P. So the same thing essentially above, but this is the inverse ETF. And you can see, again, the great correlation between the two. So definitely if you start seeing, definitely the S&P is going to move whichever way this does. So these are some good indicators to follow if you get a signal. Following up on some of these systems. Again, I've already been covering these, but I like to recover. On our webpage newsletters, we provide the live chart URLs to these charts so that you can open these in your browser, bookmark them, save them, etc. And let's see if I got one of these open. I don't, but apologize for that. Anyway, we'll cover that another time. But if you look in the webpage newsletters, at the top left of each chart, you'll see the words View Live Chart. If you click on it, you give the live chart URL, and you can save them and check them any day you want versus looking at these static images. But this is one of our systems, NYSI 9 EMA crossover system. You can see it didn't enter quite as good as the KISS system, but not bad at all, just a little off the lows. And it's been a very nice signal, and you can see all the nice buy and sell signals this year and last year have worked great. Chart 29, here's the Nasdaq McClellan Summation Index system, same thing. This one I'm using a 2 and 5 EMA, and you can see the nice signals via these crossovers as well. Chart 30, here's the McClellan oscillator for the S&P. So one thing that hints at a possible pullback coming, you have this divergence in place. I pointed this out the other day, and you can see it's been pulling back while the S&P is at higher high here. And again, a lot of times these divergences, you can see one back here in July. Obviously, that produced a good pullback. You had one back here in early February. That produced a pullback. And we got one now, just like we had a positive divergence at the lows. All right, guys, let's move on. Chart 31, here's high yield corporate bonds. They continue to be very strong. Market tends to follow that. Chart 32, here's the 2-hour view. Continues in this nice uptrend, 5 waves. This looks like more of an expanding fifth wave pattern now. Chart 33, here's the 10-year Treasury yield. Continues to melt down, now below its 38% fib. Again, back in October, I pointed out that RSI and MACD divergence, and I said they look toppy. They're in a parabolic uptrend, which was unsustainable. And I said a nice pullback in rates would be fuel for a market rally. And that's why the market has rallied so much since late October. The market also thinks the Fed is done with raising interest rates, and they think the Fed is going to cut next year. Next, chart 34, here's the monthly view of TLT. That's the 20-year bonds. Remember, these move opposite of rates. Bonds move opposite of interest rates. So this chart has played out phenomenally, guys. So back, in September, October, whenever this fell into this demand zone, I clearly pointed out these 5 waves with divergence, and I said it's likely to rally off here, and that would produce a good market rally. And so far, look at that up candle, up 11.2% in November, more than the major indexes by quite a bit. So, I favor some sort of ABC move up eventually, lower high, because in the bigger picture, TLT is now in a secular bear market. But, you don't go down every year, and this has been downtrending for 3 years, so maybe it's due for an uptrend for a year or so. Chart 35, here's the daily, just continues to push higher and higher. Again, this is opposite of TNX, which was in a parabolic uptrend. This was in a parabolic downtrend. And since breaking that, it's been moving up nicely. Moving on to market sectors. Chart 36, XOK technology. Again, I hate to even show this ETF because, almost 50% of it is 2 stocks, Microsoft and Apple. Just 2 names. You can see new highs, still holding that 9 EMA. Chart 37, semiconductors. Little pullback to the 9 EMA where it found support, trying to bounce back. Chart 38, transports. Again, little pullback into the 9 EMA where it found support, bouncing back down to the supply zone. Chart 38, jets, a subcomponent of airlines, continues to look fine. If you're still in this trade, which triggered back in early November, you could probably put a stop at that 1644 low now. Chart 40, banks. This sector did the best today. Nice bounce, up about 2%. Chart 41, XLF financials, also up nicely. Chart 42, XBI biotech ETF, up but off the highs. Again, it's been moving up nicely since that trigger that I mentioned for a long back in early November off those dojis. Chart 43, LABU, the 3-time triple ETF for biotech. Still has a decent looking pattern here. But again, we put out biotech as a long idea back right here. But it still looks okay. Chart 44, XLE Energy, pulling back again. This could be setting up to a bear pennant. We'll see. Perhaps if this were to break down one more time, then it would be a good buy signal. But right now, it's just coiling here, as you can see. By the way, what's the KISS system doing? The KISS system is flat on XLE. Even on the high performance versions, it is flat. Chart 45, emerging markets. They've had a hell of a rally as well. Still holding their 9 EMA. Okay, let's move on to commodities. Chart 46, DBC, this is the weekly chart, up 1.25%. So holding this uptrend line, which again is basically the 200-week moving average. It's bouncing off that again. It bounced off of it earlier this year in June and July. Chart 47, crude oil. Doesn't look like this one updated yet. And let's see. Yep, this one hasn't updated yet. Kind of odd. But you can see this diamond formation. And let me look here. Yeah, so crude oil was up about 1.7% today. So it appears it's trying to break out of this diamond formation. Chart 48, natural gas. This also hasn't updated. Sometimes stock charts is slow on these Commodities. But again, I like to get the newsletter out early enough so you guys have time to view it. This still remains weak, and it's starting to break this channel now. Chart 49, copper. This has had a nice rally off that major support low, as you know, a little pullback today. Chart 50, Bitcoin continues up here, but what concerns me is this little wedge forming, MACD divergence, RSI divergence. Should Bitcoin pull back, here's the ETF, short ETF, BITI. You have a little falling wedge here to monitor. Chart 52, Mara. We've had this on the long list, another Bitcoin type stock. Hell of a rally from that coil. Nice move. Hope some of you guys caught it. Now the monster has been Coinbase, Kathy's favorite. Look at that move in Coinbase. Finally, chart 54, Riot. Here's another one. Moving up nicely from that bottoming pattern. Moving on. Chart 55, US dollar. Slight bounce today. Here I added the fibs. So trying to bounce kind of near the 61.8 fib. Maybe a bounce here in the dollar will cause a pullback in the precious metals a bit, which have had a heck of a run. So let's go ahead and move on to the precious metals. Chart 56, gold up 0.3% today. Again, ever since that ABC pullback, remember I favored a major low there in October. It's had a nice move up, 300-point move up. So looks excellent. I think this is eventually going to break out to new all-time highs, guys. And you can see the stocks have been leading. Chart 57, here's the weekly chart. Again, look at this. You've had gold tested this area around the 2085, 2090 area 3 times over the last 3.5 years. I think the next time it's going to break through here and rally well into the 2000s. You can see the ratios leading here. This looks great. Chart 58, here's gold on the monthly. So if you want the very bullish view, here's your bullish view that we're starting in this wave 3 up. That's going to take us, probably into the mid 2000s and maybe eventually to the 3000s. Chart 59, silver, up 4.5% this week. You can see clearly breaking out of this coil pattern that we've been showing for a while. Chart 60, here's the monthly chart. Again, Steve has this labeled as a cup and handle. I view it more of as like a big coil. Just focus on this coil. Basically, the point is energy's been building here, and these coils can when they break, can result in powerful moves. This thing could really have a big percentage move and really start going on a good break from this. So I like silver. Moving on to the stocks, chart 60, GDX on the daily. So this inverse head and shoulder pattern has been playing out. Now, first off, via symmetry, we've basically hit the first symmetry target right here. So again, you can see a pullback at any time, but heck of a move. If you bought this a couple weeks ago, especially, and it had a stop at that higher low. Chart 62, GDXJ, same pattern. Again, this is either wave 3 or wave C. Next, chart 63, here's one of our systems, the BPGDM. This is a Rinko chart. This was an oversold territory into October, went on a buy signal there. It's been a heck of a buy signal, hasn't it? Just like that sell signal was a great sell signal in late April, early May. Let's take a look at some individual names in the precious metals. So here's FSM, which we've had on the list, this inverse head and shoulder pattern. Hell of a percentage move from that 315 break all the way up to the high threes. Chart 65, WPM, another one we've had on, wheat and precious metals. From this trend line break was your trigger. Very nice percentage move. Chart 66, AEM, another one we've had on the list, this inverse head and shoulder pattern. Massive candles yesterday, a little pullback today, but just great looking. Chart 67, GOLD, Barrick Gold, again, has the same pattern essentially. Chart 68, MTA, was one I put out over a month ago at this major support, which you can see has been important all the way back to 2017, 18, 19. Been important support and resistance. To me, it looked like a low risk buy there, and it's had a nice move off there. Finally, chart 69, DRD was the new one I put out on Monday. and it's moved up nice a little bit in from the coil. All right, guys, the final part of the newsletter, we'll look at some of our recent trade ideas, non-precious metal related. Driver 70, LMND, Steve put it, we've had it on the list. Finally popped today, but off the highs. Again, we are getting where I'm looking for a pullback in the market, so I'm not in love with doing a bunch of new longs here. Driver 71, Run, another one that's been on that was on the list. Popped today a little bit. Driver 72, Rivian, was also on the list. Popped, then pulling back a little bit off that 200-day moving average. Driver 73, Checkpoint. This has been on the list for a couple weeks now. Inverse head and shoulder pattern. And from that trigger, it's moved up nicely. Today it tagged as 200-day moving average. That was a logical place to take some good profits, guys. Great trade. Driver 74, TCN. Another one that played out nicely from that move. Driver 75, Janex, has been on the list for at least a couple weeks from that beautiful bottoming pattern with that good volume bar. That's where I liked it. And it had a great move up percentage-wise. Driver 76, BYON, one Steve put out last night, gapped up today. Driver 77, Dash, one from Steve last night, popped today but pulled back off the highs. Driver 78, NRDS, this was a coil setup I put out on a Monday. Again, continues to be off the highs the last couple days, but the pattern looks, I like the pattern. Driver 79, VSCO, one that's been on the list for a couple weeks. Really nice move from that 20 trigger. Driver 80, Massey, it's been on the list for about 3 weeks. And if you're still long, you could probably just trail the stop just below this 9 EMA. I would love to see it popped up to this 100 area. That's one of the targets. Driver 81, BLDR, another one that continues moving up. Again, I would trail the stop up now to yesterday's lows. Potential targets up here at 145. Driver 82, SWBI. It's been on a list for a short by one of our members. Kind of a rounded top, umbrella top, looking weak. Driver 83, Airbnb. Potential flag here. Again, if the market pulls back for a couple weeks, this may not play out. But if it does break out, this could be a measured move. Driver 84, here's the 60-minute chart, a coil. Again, really, guys, this could break either way. This could also break down for a short. So it needs to hold here, otherwise I'll short it if it breaks this. There is an open gap down there that could be a magnet on a breakdown. Otherwise, if it holds support here and rallies up, breaks out, then it would be a long. Driver 85, PGY, was on a short I put out on Monday. Hasn't triggered, but I said it looked weak, and you can see it continues to look weak. Again, it's a low price stock. You know, whether you want to short something that low priced is up to you, but it does look vulnerable here. And that'll do it, guys. We'll see what happens tomorrow. Current check on futures. ES futures are up about 4 points, so not much going on. And again, have a wonderful night. Thank you for your support. Thank you for watching our YouTube videos. Please like and subscribe. Comment, that helps the algorithm on trying to grow the channel. Take care, everyone. Have a good night.